We started this channel over a year ago on the belief that semiconductor technology was going to lay the foundation for the next bull market. Everyone is in this mad dash to bring some sort of chip design in-house, at least, among the biggest of the big tech firms. And this is including Microsoft. US export curbs or additional export curbs will result, keyword there, will, not could, will result in a permanent loss of opportunity for the US industry to compete and lead in one of the world's largest markets.
Welcome back, everyone, to Chip Stock Investor. As promised, we're going to be talking about Applied Materials earnings release, and we're going to add in a few more other big news topics from over the weekend. Nick, why don't you get us started?
Well, first, Casey, before we talk about some of the drama that was talked about over the weekend in high-tech land, let's tell everybody congratulations first. If you're still with us, it looks like you made it through the first market pullback of the new bull market. Unless you're all in on small cap and mid cap stocks, we're still waiting for that bull market to begin. That's a discussion we had a few videos ago, though. Anyways, kudos to all of you for sticking with us. We're glad you're here. Thanks for being here. Okay, let's maybe kick it off then with OpenAI, Sam Altman, and why we believe there's actually a chip stock investor angle to this situation.
As many of you have seen by this point, OpenAI and the board fired their co-founder, Sam Altman. And we have seen many CEO co-founder departures, but never anything quite like this. This was very abrupt. And also co-founder Greg Brockman, who was also the president, was demoted, but then he quickly quit. And as we've talked about on our show, Microsoft had invested $13 billion into the AI app ChatGPT research company earlier this year. And so undoubtedly, they were quite unhappy to hear this news. But ultimately, Altman and Brockman are going to be headed to Microsoft, and they will be heading up the advanced AI lab.
The big question here, Casey, is what in the world happened? Why did OpenAI's board of directors pull this coup? And now it looks like they regret everything that's happened for good reason. This is probably not something they feel bad about as much as they feel bad about the results and everything that happened since, because it looks like there's going to be a large exodus of OpenAI's talent to Microsoft and other AI startups. So, Casey, this is what we think happened. This is what seems was likely leading up to this weekend. It seems OpenAI's board was uncomfortable with how aggressive Sam Altman was getting with fundraising. So to be honest, this is kind of weird because OpenAI, when it was founded back in 2016, the original charter for the business was a non-profit organization. So the board was acting decisively in pushing Altman out because of that aggressive fundraising. And it seems that the board was more going the direction of wanting to go slow with the rollout of new AI tools versus Altman, who wanted to just kind of push all of these new features out as quickly as possible.
Nick, this is all very interesting and definitely will have an impact in the semiconductor space, but maybe you can tell us how, because this is a vital point.
Yeah, Casey, this is definitely a semiconductor angle here to the story. So among other things, Casey, Altman going after fundraising because OpenAI currently burns through cash. The unit economics of these new generative AI apps like ChatGPT do not lend themselves to making money. So that was probably the primary reason for aggressive fundraising. But apparently there was also some talk of making an in-house AI chip design segment. Perhaps Microsoft will now bring Altman in for this task as well as it tries to play catch up in this department with Nvidia, with its AI training dominance, with Google and its Tensor chips. At any rate, Casey, here's the important bit. We started this channel over a year ago on the belief that semiconductor technology was going to lay the foundation for the next bull market. And this has all but been proven at this point. Everyone is in this mad dash to bring some sort of chip design in-house. At least, among the biggest of the big tech firms, they want in-house chip design as part of their research and development. And this is including Microsoft. Recently, just last week, they had finally announced this AI chip named Maya. It's going to be internal use on Azure at first. They're testing it. Also Cobalt, a more general purpose CPU, again, for Microsoft Azure for their cloud computing segment. The world has decided it needs more advanced computing. It needs more sensors, electricity management, and et cetera. And a ton of capital is moving en masse this direction. So eventually, again, this was a video we did just recently. Check that out if you haven't seen it yet. Eventually, this is going to mean a crash at some point down the road at the end of this new bull market that is just beginning. But at this point, it's become abundantly clear semiconductors are a new type of infrastructure, and the world needs a lot more of it. And so this next bull market is most definitely going to be all about chips. And we think that is part of the angle of this story here that is not receiving a lot of coverage. Great news for Microsoft with this OpenAI blow up. They're probably not super happy about their $13 billion investment in OpenAI and ChatGPT, but they do land Sam Altman, who has been an absolutely incredible fundraiser and gotten a lot of people to rally behind his vision for the AI future, generative AI future.
Nick, I know this wasn't necessarily in the outline, but I think a lot of people are wondering, is Microsoft stock an add to our portfolio with this big change in getting Sam Altman on board?
Keeping us on point, Casey. Great question. For us, no, we are not buying Microsoft. Apple and Microsoft, the most premium priced big tech stocks, excluding Nvidia, I guess. We're still not super clear on what the cadence of their financials will be headed into 2024. But of the big tech companies, Microsoft and Apple, the most premium priced. And no, we are not buying Microsoft right now. We don't feel like it adds anything extra to our portfolio at this point because we own Apple already. We own Alphabet, Google, we own Meta, and they're all in various stages of AI development and hacking up this market in various ways. For us personally, no, we're not buying Microsoft.
Before continuing, let me remind you to hit the like button and subscribe to the channel if this video is helpful as you do your own investment research and increase your knowledge of business and technology. We really appreciate the support as subscribing to the channel helps us continue putting out content like this.
Okay, fair enough. Let's move on to Applied Materials, which had an interesting earnings report, to say the least. It was a solid quarter, Q4 of Applied Materials fiscal 2023, which ends in September, beat expectations, and we'll go over those numbers in just a second. But really, the big news out of this earnings was a Reuters report that claims Applied Materials is under criminal investigation by the Department of Justice over allegedly shipping banned chip-making equipment to China, specifically to Semiconductor Manufacturing International, or SMIC. The claim is that Applied Materials shipped this equipment via its South Korean subsidiary in 2021 and 2022 after SMIC was added to the Commerce Department's entity list in December 2020 to prevent the Chinese military from acquiring or developing advanced chips for AI. This seems like big news, Nick. So let's talk about whether or not this affects our thesis for Applied Materials going forward.
The very simple answer is no, it does not. This is super weird, Casey. So that Reuters report came out almost at exactly the same time as Applied Materials was getting ready to release its earnings report. Kind of strange. Seems like a great way to get a ton of clicks and traffic to your website, but we're not here judging. But let me clarify something here, Casey, because this is really important. And this is really at the heart of why this doesn't change our thesis for Applied Materials. So this investigation, the fact that Applied Materials was subpoenaed by the US government last summer in August of 2022, was actually already voluntarily disclosed by Applied Materials in October 2022. And it has been disclosed in every single 10Q. Those are the quarterly filings with the Securities and Exchange Commission. There's been a note in every quarterly filing since then. And this is a point that Applied Materials CFO Bryce Hill pointed out on the earnings call before declining to comment further, because this is a legal matter. This is not public information. And to be honest, when you go through the Reuters article, all of the points made are already publicly known information. And some of the new points, I'm going to put that new points in air quotes, were highly, highly speculative, just rumors, because this is an ongoing investigation. Applied Materials has said it's continuing to work with investigators to figure out what happened and determine what action, if any, will be taken next against the company.
Let's look at the chart that Applied Materials has provided regarding chip fab equipment to see what might be under investigation. This is all just conjecture on our part. We don't know exactly what equipment is being targeted in this investigation, but Nick, what are some of the things that could possibly be on the list?
This chart indicates market share of the Fab Five, the five largest semiconductor wafer fab equipment companies. Big player in etch, which is an important step after lithography. You see the big purple bar there on the left that signifies ASML. It could also be some other type of patterning step, some sort of tool that helps with the patterning of those microscopic features on chips. It could be something with advanced packaging. We don't know. It could be anything specifically pertaining to AI chips, the most advanced AI chips that have been getting all of the hype, all of the media attention the last couple of years now. This is an interesting point, though, Casey, that was pointed out in the Reuters report, saying that apparently this investigation, though, involves hundreds of millions of dollars worth of equipment. That sounds very, very dramatic, but it's kind of funny because Applied Materials just reported well over $20 billion worth of sales in the last year, and has every year for a number of years now. A few $100 million worth of equipment is pretty small. So it would seem this is not some sort of indication of widespread corporate law breaking at Applied Materials. That's just my take here. But, you kind of put some of these pieces of this breaking story together and it doesn't seem all that dramatic.
So I guess the moral to this story is we all just need to relax a little bit and wait and see what happens. I mean, ultimately, this story could take years to develop, and we probably won't find out what the conclusion of the investigation will be for years, potentially, right? So let's talk about the earnings report for Q4 and the outlook. Revenue was $6.72 billion. It was flat year over year. GAAP earnings per share of $2.38, which was up 29% year over year. And on an adjusted basis, that was $2.12, up 4% year over year.
Casey, let's talk about the outlook here for a moment, which is Q1 fiscal 2024. This is for the final 3 months of calendar year 2023. Again, remember, Applied Materials fiscal year ends every September. Okay, so for revenue is expected to be $6.47 billion, plus or minus $400 million. That compares to $6.74 billion last year. So we're looking at the midpoint, a slight year-over-year decline of about $250 million in sales. This time last year, Q1 2023, they had reported a 7% year-over-year increase in revenue. Applied is not losing a ton of ground, but it does look like a slight dip is expected for the next quarter. Same goes for adjusted earnings per share. Their outlook or their range is $1.72 to $2.08 versus $2.03 last year. Again, this time last year, adjusted earnings were up 7%. So it looks like we're going to be headed for maybe at best just a very slight increase, but more than likely a flat year-over-year increase in adjusted earnings or slightly down.
The story here is ICAPS could be headed for a bit of a down year, offset by uptick in logic and memory. So Nick, explain to us what's going on. I thought 2024 was going to be a big year for chip fab equipment companies.
And it still could be, right? we're still in calendar year 2023. And so that's actually what Applied Materials is reporting here, just for the final 3 months of calendar year 2023. It's been an ugly year for chip fab equipment providers, but Applied Materials has actually handily beat its average peer in growth and reporting a little bit of year-over-year growth in sales and in profit margin expansion, which trickles down into those nice increases in earnings per share. But Casey, you mentioned ICAPS. That is what Applied Materials calls equipment, semiconductor manufacturing equipment for IoT, Internet of Things, communications chips, automotive chips, power chips, and sensors. So oftentimes you hear these things called analog chips or mature manufacturing nodes. They're not really like old. That sometimes implies like these are like old chips and they're like kind of boring, and they're not really. These are still very advanced chips, but these are for markets that tend to be a bit more mature than the sexy stuff that we like to talk about all the time, the logic chips for generative AI, expected to be the big growth market over the next few years. So 2022 and 2023 were huge for ICAPS, and including in mainland China. There was a big increase, again, in equipment sent to mainland China from Applied Materials, much like ASML Holding has been reporting as well as of late. We'll get to that in just a second here. So it looks like after big years for ICAPS in 22 and 23, Applied Materials is expecting possibly a slight decline. Not a surprise here. We already talked about this when we discussed on semiconductor and some of these other companies that address industrial and automotive markets. But again, like we talked about when we discussed Qualcomm, Intel, and AMD, we are expecting finally an uptick in logic and memory chips driven by things like PC and smartphone demand starting to bottom and then possibly mounting a rebound in 2024.
Based on this Q1 2024 outlook, which is down slightly year over year, and given that Applied Materials stock has outperformed the market in the last year, we're pulling this off of our top 3 stocks for now. It's just a pause. That being said, we still truly believe that in the second half of 2024, we're going to see some booming equipment sales here. So this is going to remain a very interesting stock to watch over the coming quarters.
Casey, so everything you just said there, we knew already, but this is great confirmation from Applied Materials, one of the biggest companies in this business. We've owned this one for many years. This stock has been in our portfolio for 6 years now. And again, like you said, just a pause, just a brief pause for us personally. But we do know one thing here, Casey, regarding earnings and this indication that maybe the first half of 2024 could be a bit bumpy before the second half of 2024, we see a more robust rebound. Now, in the light of this investigation from the US government, we actually think Applied Materials may not be the only company facing this type of challenge. Let's circle back to ASML. We've previously discussed that big jump in China revenue from ASML. Applied Materials just said 44% of their sales went to mainland China last quarter. A lot of that was supposedly DRAM memory chip equipment. ASML had a very similar report in their last quarter as well. Theirs was more likely due to, as we said, new export restrictions, more export curbs going into place on January 1st, 2024 for immersion DUV or deep ultraviolet lithography equipment versus the high-end EUV, extreme ultraviolet equipment that's already been under export restrictions for years. But given this and this sudden surge in revenue from China, we think the US government may not just stop with Applied Materials. At some point, they may also be looking at a company like ASML to figure out why this sudden uptick in revenue to China. Is China trying to front run some of these new export bans and trying to get more equipment in ahead of these things? So it's interesting to note here, Casey, we want to keep an eye on this as well.
Yeah, that absolutely makes a lot of sense, Nick. What has given us some indication as to how these companies feel about these export bans? Because we know ultimately it affects the bottom line.
Great question, Casey. We've gotten more than some subtle hints that many of these companies are they're compliant. At least they're saying that they're complying with the export restrictions. Applied Materials saying they're working with the government on this investigation of their sales in 2021 and 2022. But we know they're unhappy. ASML has indicated that they're quite unhappy with these US export curbs. They already had the EUV machines banned a few years ago. Now some of the DUV machines as well. Again, we had those reports just a few months ago about Huawei being able to make the equivalent of a 5 nanometer chip for its new smartphone. ASML has made it pretty clear that they're not super thrilled with having to jump through these new hoops all the time. And I don't think it stops just with the equipment makers either, Casey. We're awaiting Nvidia earnings this week. We're going to get to see what their third quarter looked like. But let's rewind 3 months to their Q2 earnings call. And this is an interesting quote that you pulled up for our outline in prep for today, Casey. Nvidia CFO Colette Kress warned that U.S. export curbs or additional export curbs will result, key word there, will, not could, she said will result in a permanent loss of opportunity for the U.S. industry to compete and lead in one of the world's largest markets. In other words, what we think Nvidia is saying here is they believe China already has everything they need to continue developing its own independent chip industry without U.S. equipment and U.S. chips. It'll take time, but they already have all the ingredients they need to self-perpetuate their internal semiconductor industry. This is not, if you read Chip War by Chris Miller, I think you'll recognize here that what has been developing over the last couple of years is not the same situation as the US cutting off the Soviet Union, the USSR, from chip technology decades ago. Semiconductor technology has already proliferated throughout the world. The equipment is out there, the chips are out there. And I think Nvidia and a lot of other companies' belief is all that's going to happen is the US is just going to lose its ability to compete in the very large Chinese market in exchange for maybe temporarily hobbling their efforts to develop their own internal chip industry.
The moral of the story, as many of our viewers know, we removed ASML from our top buy list earlier this year. We have zero plans to sell Applied Materials or ASML in our portfolio, but we're not adding either of those stocks right now. We do want to wait and see what the coming quarters have to offer us. Nick, we know that India has been trying to kickstart their goals in the semiconductor industry, and we have one more piece of news that we found interesting. What is that?
Yes, we've been reporting about India a couple of times in recent months, sometimes in the light of Tesla making a push to be able to start selling its cars in India. And in exchange for that, India is very interested in, like you said, Casey, kickstarting its own chip industry. So a little bit of news. India's very large technology conglomerate, Tata Group, apparently is searching for land to begin building a chip packaging, test, and assembly facility. So this is interesting, Casey. We know a lot of companies starting to invest outside of mainland China, which is where they have historically stuck a lot of these final test and assembly facilities. That's after the chips are made, they need to be packaged up on a circuit board, which then gets installed in some sort of computing system. A lot of companies looking to diversify geographically outside of China now. And India could be a top landing spot for that. So Tata Group looking for land to build such a facility. And Casey, as you've mentioned, this has big implications for where we're at presently in the global economy, right?
Yes, as we've talked about, chips are the modern day infrastructure, and everyone is very interested in getting in on this industry in their country, on their shores. A chip fab equipment boom is coming. It may get rolling in the second half of 2024. We just may need to be patient. Thanks for watching this episode of Chip Stock Investor. Make sure you subscribe to the channel. We are getting close to our 10,000 subscriber goal for this year. Please, if you have not subscribed, hit that button for us. We really appreciate it. Later this week, we'll have Nvidia earnings, news, and updates. And we still have to talk about Palo Alto Networks and we're going to add in one other company, Visa. And how is that a chip business? All right, everyone, we will see you again very soon. Hope you're having a great week. Take care.